Hello there, guys. Welcome. It's Saturday, May 21st. My name is Dave Coker, and this is, of course, Talking About Finance, where we just talk about finance. Believe me, I have the best life ever. I get to talk to my buddies 24/7 on Telegram about finance, and I bring it to you once a week. I know that's all you can stand, but you're doing a really good job. So let's start to look at where we are with the S&P 500, and all I can say is one word: wow. As we discussed last week, it's the worst start to a year since 1932. It's made worse because the market hit an all-time high on the first trading day of 2022. So what happened this week? Well, S&P 500 finished down about 3% on the week. It's now down 18.1% year to date. It's pretty dismal. The VIX traded up to 30.96 on the week, and then it just declined from there. It closed at 29.43. It is just about where it closed last week, so we didn't really see any change there. Now, it's another wonderful week in the markets, and I mean that most sincerely. I always tell people every day in the markets is historic in some ways. You just got to look for it. And it's in times like this where people don't have to look far, my gosh, for their history lesson. Look at last Wednesday. We saw the single largest decline in the stock market since June of 2020. There you go, history in the making. I love these nuances. I love reading stock market almanac. It's absolutely wonderful for stuff like this. The 10-year note closed down this week at 279. We see yields are falling, prices rising. Maybe some people are thinking the Fed's not going to advance from there. We're up about 2.1% or about 1.2% year to date. Oil closed the week at 110.82. It's up about 0.3% week on week, 47.3% year to date. No real big change over the week. Now, things that are going on in the markets, guys, why did we see such a big whack? Well, two tickers seemed to kick off the action. Target, what the hell is the matter with me? I'm sorry. Target and Walmart both reported lower than expected operating margins, and the markets did their thing from that point on. But looking beyond and at more of the data, we can see something, okay? We can sort of see that both reported robust consumer demand. Target, for instance, if you read the analyst notes, Target had a 4% year-on-year increase in store traffic. Sure, they're purchasing lower-priced items, so their basket changed, but consumers are responding to higher prices, and that's fine. But more and more of them are coming in, and that's going to translate into more business, without a doubt. So is a recession inevitable at this point? Well, a lot of speculation at that. I don't really predict that kind of stuff, right? But it's not really sure. Although the equity markets seem to be pricing in about a 75% chance of a recession. But then again, the wild card is the Fed. What's the Fed going to do? They might move in an unexpected way and avert a full-on recession. Who knows? So before you rush to sell, keep in mind, the markets typically experience about a 17% rebound in the first 6 months after a market bottom. So you need to be fully invested. It's very difficult to call a market bottom and deploy all your capital into the market at that point. Just stay fully invested. We've had a drop of roughly 25% since the top. Lots of chatter about a recession, lots of fear in the market. All I can tell you guys is what I'm doing. I'm keeping the faith. I'm buying stocks every month as dividends are paid. What else am I going to do with my money? I'm going to lose 8% due to inflation? I don't think so. I didn't get to be a high net worth investor by screwing around with money. So embrace the fear, buy the stock, and don't you dare sell. Oh, and finally, I bought Bitcoin yesterday. I buy Bitcoin every Friday. You know this. I've been doing it for years. Still buying Ripple another 4 out of 5 days this week. I'll buy more tonight. Ripple is my high risk play in crypto. Risk, uncertainty. These are the factors that motivate us to build wealth to begin with. So embrace the fear, recognize the risk, go forth and get rich. That's all you can do at this point. There's really nothing else that we can do. Here's an interesting one. Once again, just going through what was posted on the Telegram channel. Yeah, I thought this was pretty good. I posted this, right? And I can tell you why. So Buffett, Bogle, other financial planners say when the market's down, stocks are down, don't watch the market closely. I can tell you from personal experience, I learned this about 30 years ago when I used to watch the market day by day. I sold at the worst possible time. I realized the loss, and then stocks rebounded. So if you bought good names, if you feel confident in the company when you bought it, if the business hasn't changed, just hold the stock. I don't even look at individual names at this point. I look at line items. I look at items, I should say, for various portfolios. I'm still doing well. I'm still up roughly 25% or so on my capital. Doesn't matter. Remember, I'm investing for dividends only. They pay dividends every month. I take the money, I buy more stocks. I'm certainly not selling, but I'm not looking at individual items. I know some of them are down and a couple substantially. I don't care. They still pay the dividend. So why would I bother about that? They pay the dividend because they do investments and then they realize the value of the investments and they hand it out to investors in the form of dividends and sometimes paybacks as well. And this is something we talked about 6 months ago. I was going to look, but I forgot. Goldman called it the revenge of the old economy. Remember, CAPEX in tech was hitting records, even as CAPEX, capital expenditure investment, was hitting record lows in commodity producers. Well, look at this. We're starting to see CAPEX paying off. We're starting to see dividends increasing. We're starting to see share repurchases increase. And of course, both of those, especially share repurchases, translate into higher stock prices for commodity producers. So I've got fairly large positions in ExxonMobil. I shared that with you before. Yeah, that stock's performing pretty well. Just keep this in mind, that all this stuff is cyclical. So yeah, I would advise you to ease in. Maybe don't go full in, but just ease in and build a position up. Another one that was really interesting, we were chatting about, we talked about this every day for quite a while. What we've got here is we've got the median home price versus the supply of money, M2. And I put my own research up before about M1, M2, and the U.S. money supply. And you can see the money supply has increased some 42%. Home prices up some 31%. What do you think is driving the sharp increase in home prices? Yeah, the U.S. all of a sudden hasn't experienced like 100 million people coming in, a third of the population more people coming in. There definitely is some immigration into the States, but the point is most of the price increases are being driven by this huge increase in money supply that the Fed and the politicians engineered totally irresponsibly. And guys, you know, fully 71% of my capital is invested in bullion, gold and silver. Now, this house price spike, we're seeing it across the Western democracies, and I shared with you last week that I'm selling some well-performing properties in London simply because I'm being offered stupid money. And when I'm offered stupid money, I think, well, not that socially responsible. I am known for going back to the store and paying for something they didn't register. I've done that a couple times to my wife's surprise. I just feel guilty. If someone's offering me stupid money for a property in London, I'm taking it. So this is a global phenomenon. It's really interesting to see that. We know it's going to come to an end. In fact, it's already starting to come to an end. Check this out. Once again, we see people with subprime borrowers defaulting on credit cards, car loans, personal loans. If you read my blog, FinTech Flash News, I have a big hate on for buy now, pay later, BNPL. Oh my God. But we saw this in the global financial crisis. We saw the canaries in the coal mine, credit card defaults, car loan defaults, personal loan, unsecured personal loan defaults surging. And then the big one, house prices. Now, people will do a lot to make sure they don't lose their home. So it's house prices are always the last. We always see home loans defaulted on last. It's going to be no different this time. Don't be naive. Don't listen to the politicians. Just think about what I'm saying. Go back and look at the history. We saw this play out in the global financial crisis. It's going to happen again, and it's going to be worse. It's really sort of sad to think about this. It's interesting. But borrowers are reacting to the high inflation environment. Check this out. This is good. Personally, I like this. I always buy secondhand if I can get it, even third hand if I can get it, right? I'll take it for free. If you want to give it to me for free, I'll take it. But the point is, we're starting to see people are encouraged to buy secondhand products now. When if you go back even to 2017, 2016 or so, they wouldn't go anywhere near it. There was a stigma. My God, people are so ignorant when it comes to money. I'll tell you, I don't care. People bug me all the time because I post on social media sometimes. I post pictures of the money I found in the streets of London, usually two pence, 4 pence, every now and then a pound or so. But the point is, people say, how come you bend over and pick up that 2p coin? And they laugh at me. Hey. I rue the day when 2 pence is not worth getting on your knees to fish out of the gutter. See, yeah, I've been doing it for years. People now are starting to buy secondhand products. Really fascinating time. And Warren's got some advice for us. I do like this, but I'm going to broaden it a little bit, okay? Now, Buffett says when inflation's high, what he advises you to do is to be really, really good at something. Well, I'm nothing if not a proponent of side hustles. I have many, many side hustles. I won't tell you how many, but believe me, but teaching at the university, running a property business, selling research is not everything that I do. I have many other side hustles, and I would go a little bit further about this, Warren. I would simply say that the best thing people can do when inflation is high is to have side hustles, build more side hustles, and basically monetize that spare time. When the wife and I are watching Netflix, like we're going to do this evening, I'm always sitting there tapping away, doing an infographic, doing a podcast, doing a script for a book I'm writing. You can do the same thing. So build some side hustles and get ready to go. Just make money and you'll be fine. Oh, and this is wonderful. We got to talk about cryptocurrencies. On the back end of the Terra Luna disaster, where $100,000 invested in Luna when it was $100 is now worth $14. I put that on the Telegram channel. Somebody posted he doesn't know how to tell his wife that he took $100,000 of their savings and invested in Luna about 6 months ago, and now it's worth $14. I don't know what to say about that. And this, I don't know what to say about this either, because I hate to say bad things. All I'll say is this: I like dividend paying, and it ends there. Because if I want dividend paying, I'm going to buy a stock. I'm not going to buy an equity-backed cryptocurrency. Who in God's name knows who regulates this? It ain't going to happen. And I don't care if Steve Wozniak's got his picture up there and all these other people that I have no idea who they are. Although Steve's righteous. Designer of the Apple II. Anyways. Yeah, I'm not so sure about that. Be careful. There's only one, and it's called Bitcoin. And guys, our friend Plan B, you can look him up on Twitter. He's got his URL there as well, planbtc.com. You can look him up, and he's refined his model a little bit. Now, he's pulled back from the $100,000 a coin Bitcoin prediction for 2022. However, he seems to track it out, and he seems to think that it's definitely doable over a sufficient horizon. And yeah, I got a lot of time for this guy. He gets a lot of negativity on social media, but I notice most of the negativity comes from these idiots that try to trade Bitcoin. You can't time the markets. We talked about that at the beginning of this presentation. You can't time the markets. You can't choose to enter Bitcoin when you believe it's at a low and expect it to go up to a high. Buy and hold. That's a viable strategy for any asset, any capital markets-based asset you might choose to engage. Buy and hold. It's the only way to get rich. For sure, it works. Okay, guys, thanks so much for your time. That's it for this week. You're going to have an excellent week. Remember, you got cash, you put it in the markets. Doesn't matter what you're buying, just don't sit there. Buy something. Take care, guys.